The major US stock indices faced a profit-taking activities yesterday ahead of this week key risk event, which is Wednesday FOMC meeting. The US dollar traded sideways, and the yen was the weakest currency among the major US dollar pair due to a sudden earthquake that has took shape in late Monday Japanese session yesterday. Very good morning to all, and welcome back to today's Daily Dose of Market Insights. I'm Kelvin here. Today will be Tuesday, the 9th of December 2025. So as usual, before we jump straight into the gist of today's Daily Dose, let's have a quick look at the disclaimer first. Leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is for general information purposes and is not investment advice. Past information is not representative of future results. All right, so here we go. So before we jump straight into today's toned down Daily Dose of Market Insights, which I only featured two charts of the day, let's have a quick recap of what has taken shape yesterday in terms of news flow and relevant economic data releases. So if you look at yesterday's session in the US stock market, it's rather sideways, I would say, profit-taking session, not a kind of a major risk-off session. Why? Because one of the risk-on proxy sector, which is the semiconductor industry, within a subset of the technology sector, managed to outperform yesterday. So what we could see over here is that the SPX is down negative 0.35%, the Nasdaq down negative 0.25%, the Dow Jones down negative 0.45%, the Russell 2000 closed almost unchanged. But what's interesting over here is that this SOX is the semiconductor industry within the information technology sector, managed to outperform the major US stock indices by 1.10%. And we know SOX is considered as a, give me a, so let me share with you guys. Hopefully, yeah, this SOX. All right. So the semiconductor industry or sector managed to inch up higher yesterday, rose by 1.10%, which clearly surpassed both the SPX and the Nasdaq 100. And very clearly, SOX is considered as a high beta risk on, we call it gauge, whether the US stock market is on a cliff of falling further down the road. So given the fact that the higher beta SOX managed to outperform yesterday's US stock market, it means that yesterday's negativity that is being seen in the three major US stock indices, SPX, Nasdaq 100, and the Dow Jones Industrial Average, is more likely due to positioning adjustment ahead of the key risk event this week, which is the FOMC meeting outcome and the release of the latest dot plot out on Wednesday, which is Singapore time 3 a.m. So we'll talk more about that when we head into this FOMC day on Wednesday. All right, so if you look at the heat map of the S&P 500, what we could see is that the semiconductor sector, almost all major cap is in the green, outperformed by NVIDIA and Broadcom. NVIDIA managed to stage a rebound of 1.7%, also being supported by this positive news flow out from the US White House administration, where the US White House administration, under the persuasion of Trump, managed to allow NVIDIA to ship its H2 artificial intelligence chip to China in exchange for a 25% surcharge over here. So this decision allows NVIDIA to potentially regain billions of dollars in lost revenue or businesses from the Chinese market, where they were shut down earlier this year due to that ban of selling H2 the lower tier H200, which is the lower tier artificial intelligence chips to China. So because of this, we call this breakthrough, other US chip makers such as Intel Corporation, Advanced Micro Devices, AMD, are also eligible to ship approved customers. That means going forward, Intel, AMD are also allowed to ship their relevant so-called approved AI-related chips to China, but subject to a certain percentage of surcharge they're going to pay back to the US government. So nevertheless, it's still a positive news flow for NVIDIA. So that created that semiconductor stocks outperformance over the broader US stock market yesterday. All right, and over in the FX news over here. So FX news yesterday, we see a sudden weakening of the dollar, of the yen against the dollar. That means the dollar yen spike up yesterday. So if you look at the US dollar performance against the major currency as of 9th of December, so you realize that at this point in time over here, during the later part of the Asia session at around 3 p.m. to 4 p.m. Singapore time, there's a spike up in the Japanese yen, right? The dollar yen, which is highlighted in dark blue. So the reason why the dollar yen spike up in late yesterday's Asia session is due to this sudden earthquake in the northern part of Japan, Hokkaido. So they actually prompted tsunami warnings from the Japanese authority after a powerful magnitude 7.5 earthquake struck off the coast of Omori. So that's more like a northern part of the Japan. So the Japan Meteorological Agency will keep an alert for further quakes in the Hokkaido offshore region in place until 16th of December. So yes, despite the fact that Japanese authorities has lifted all tsunami warnings because of this drastic quake of 7.5 quake, potentially it could actually see negative economic repercussion, at least in the short term, and that also potentially could reduce the chance of this potential up and coming BoJ rate hike going forward. So bear in mind that the yen strengthening in the last 2 weeks is due to the hawkish remarks coming out from BoJ Governor Ueda, indicating there could be a higher chance of a second interest rate hike coming into BoJ in the next 2 weeks, all right, over here. So because of this earthquake, potentially that has reduced the chance of a BoJ rate hike in December. Then that also causes the yen to actually weaken against the dollar yesterday, broken above our tightened short-term pivotal resistance at the 155.50 level. All right, another news flow I share with you guys over here is more pertaining to the current short-term underperformance of the China-related stock market / Hong Kong stock market as well, is due to this new bipartisan, we call it legislation. That means the US Congress is paused to enact bipartisan legislation. That means bipartisan means agreed by both Republicans and Democrats, that would potentially block some Chinese biotechnology companies from US government-funded contracts and authorize the Trump administration to bar US investment in Chinese AI and advanced computing. So it's more like a new kind of a investment curb from US businesses into Chinese biotech and Chinese AI businesses. That means preventing Chinese biotech firms and Chinese AI firms from receiving US investment over here. So that also created a negative feedback loop into the Chinese stock market, i.e. the Hong Kong stock market. If you look at the Hang Seng index right now, it's actually down negative 0.82% over here, and the Hang Seng Tech, the higher beta Hang Seng indices among the 4 of them, is down by negative 1.4%, and even the A-share CSI 300 index is down by negative 0.24% as we are speaking right now. All right, so that sums up the first part of the daily dose. So let me now move on to the second part of the daily dose, which covers the technical outlook. All right, the chart of the day. So before I demonstrate the chart of the day, let me share with you the updated levels for the Hong Kong 33, given the fact that the Hong Kong 33 has broken down below the neutrality limit. All right, so yesterday we flipped to a neutrality stance for the Hong Kong 33. So in today's Asia session, as we are speaking right now, 11:13 a.m. Singapore time, it has broken below the lower neutrality limit level at 25,660. All right, over here, due to that negative news flow where US Congress is poised to pass further curbs to prevent US corporation or US investment into various China biotech and China AI related companies. So with this breaking down of the lower limit of this Hong Kong 33 neutrality zone, which I highlighted yesterday at 25,660, and also the hourly RSI is also inching downwards, showing no signs of any bullish divergence yet. It's going to inch up a lower low in line with the price action. So with that, we will flip to a bearish stance for today on the Hong Kong 33 using yesterday's we call it today's Asia session high as my pivotal resistance level, 25,830. Near-term support level to watch will be at 25,410. a breakdown below this level will potentially retest the crucial minor swing low of 21st of November at 25,150. Only a bullish breakout and hourly close above 25,830 will invalidate or negate the ongoing short-term bearish tonality or bearish tone to see a squeeze up to retest last Friday minor swing high area, which is also the 50-day moving average, acting as the next near-term resistance level at 26,143. Let me put it in writing. All right, 26,143. 140. All right, 26,140. We round it down. Okay, so that sum up the updated levels for the Hong Kong 33 representing the Hang Seng Index. So now let us move on to the second segment of the daily dose, which is my chart of the day. So today's chart of the day, two of them I'll be sharing. Firstly will be the Aussie dollar. All right, so I'm going to share the Aussie dollar because it's in line with the important related event as well that is coming out at 11:30 a.m. Singapore time. Now it's at 11:15 a.m. Singapore time as we are speaking live. All right, so that will be the RBA interest rate decision over here. All right, out at 11:30 a.m. Singapore time. Right over here. So market participants has anticipated RBA to maintain on hold at 3.6% year-on-year, 3.6%. All right. So that will be a third consecutive hold. But however, due to the hawkish remark made by RBA governor in the parliament last week, due to also the fact that the the inflationary pressure in Australia starts to creep up, and potentially she may actually issue a hawkish press conference thereafter at 12:30 p.m. So that could actually potentially support further strength in the Aussie dollar, given of that bullish breakout of that major long-term descending circular trend line that has been in place since February 2021 previously over here. So with that, that will be my chart of the day. What we could see is that previously we wanted a pullback, and the pullback takes shape yesterday at the 0.66230. 0.6630, 0.6620 zone. So it's no change in terms of the pivotal support. So pivotal support still remains the same at 6605. So as long as this pivotal support holds today, in light of this key risk event that is going to take shape in about 15 minutes from now and 12:30 p.m., which is RBA press conference by the Governor Bullock. RBA Governor Bullock. So I'll be watching very closely 6605 as my short-term pivotal support level to maintain this ongoing short-term bullish bias trend for the Aussie dollar, with the next resistance coming in at 6660 in the near term. Only a bearish breakdown below 6605 will negate the bullish bias tone to see a deeper minor corrective pullback towards 6580, maximum 6555/6537, which confluence with the lower limit of this minor ascending channel in place since 21st of November, and also confluence with the 50-day, the intersection of the 50-day and the 20-day moving average, all coming into as a similar intermediate support level at 6537. So Aussie dollar will be my chart of the day, still maintaining that bullish bias using 6605 as my short-term pivotal support. The next chart of the day I'm going to share with you guys will be the Nasdaq 100 over here. So the Nasdaq 100 managed to bounce off right exactly at my first support level at 25,580, which I highlighted yesterday. So given that it can't break above 25,760, that was tested during the start of the US session before that pullback takes shape. So still no change, still maintaining that bullish bias using 25,455. Next support level to next resistance to left, watch out for after 25,760 will be 26,070 in the first step, which is the minor swing high area of 3rd of November. And also a bullish breakout above 25,760 will increase the probability of the start of a brand new bullish impulsive sequence for the Nasdaq 100. Why? Because 25,760 is a stubborn near-term resistance level that causes the AI bubble fears to renew AI bubble fears to actually emerge in the US stock market. That was on the 12th of November that saw that we call it steep intraday sell-off that took shape in 12th of November to 21st of November, where we start to see a key minor bottoming or minor low on 21st of November that kickstart this we call it minor impulsive upmove sequence thereafter. Right, so given the fact that a breakout above 25,760 as well will also increase the probability of a brand new bullish impulsive upmove sequence for the Nasdaq 100 to potentially even surge to retest the current all-time high at 26,290 in the first step. So only a bearish breakdown below 25,455 will invalidate today's chart of the day bullish bias view for the Nasdaq 100 to see a deeper corrective pullback towards the next intermediate support zone at 25,305, 25,185, which confluence with the rising 50-day and the 20-day moving average as well. All right, so that sum up the second segment of the daily dose, where I will share with you two charts of the day today, which is the US Nasdaq 100 and also earlier on the Aussie dollar. So let me move on to the last segment of the daily dose, which is what are the key economic data to look out for other than RBA interest rate decision today. So going into the European session, we have 3 p.m. Singapore time. We have Germany balance of trade that will be out at 3 p.m. Singapore time. That could influence the euro dollar, the euro crosses, and even the Germany 30 CFD index. And thereafter, we have 6:45 p.m. Okay, no, 5 p.m. Singapore time, pardon me, 5 p.m. Singapore time, we have BoJ Ueda speech that could potentially influence the dollar yen. So since we're talking about BoJ Ueda, previously he has been rather hawkish. So given yesterday's sudden earthquake in northern Japan, will his hawkish tonality change? So market participants will be paying close attention to his public speech out at 5 p.m. Singapore time. So given that Ueda is speaking, let me have a quick we call it sharing on the dollar yen right now over here. So the dollar yen yesterday, it squeezed up above our Titan pivotal support at this 150.50 over here, and right now it's actually resting at the next intermediate resistance, which was the previous lower high that got rejected at the 155.95/156.18. And what's interesting over here is that we see a higher high upon the testing of this intermediate resistance. The next intermediate resistance after 155.50, we now start to see a bearish divergence unfolding again on the hourly RSI, indicating the lack of upside momentum as we are speaking right now. So ahead of this BoJ Governor Ueda speech, and with this bearish divergence that's being invoked right exactly at the next intermediate zone of 155.95/156.18, I will not be so aggressive to flip into a bullish stance right now, but instead I will flip to a neutrality bias, but more inching towards further weakness of the dollar yen if it's able to break back below the 155.35 level, lower limit of this neutrality zone that I have for today on the dollar yen. So watching very closely the 155.35, a breakdown below 155.35 will reinsert potential bearish tone back to the dollar yen to revisit 154 to revisit yesterday's Asia session low before the spike up at 154.90. A breakdown below 154.90 could potentially expose 154.40 next, right? So that's for the dollar yen, right? Then other than that, the next event to look out for will be another key central banker speech. Bank of England Governor Bradley's speech will be at 6:45 p.m. Singapore time. So that could influence the sterling dollar and the sterling crosses. And at 11 p.m. Singapore time, which is where the US stock market session has really gets underway, will be a tier 2 US labor market data for the month of September and October. So this is daily data. The jobs, JOLTS, job openings data for September, October will be out at 11 p.m. Singapore time. All right. Then thereafter, we will have a quiet US session. And at the start of the Asia session tomorrow, we will have a 7:50 a.m. Japan PPI data, something to take note of as well that could influence the dollar yen rate and yen crosses. And also the China stock market will be the inflation rate for China and the PPI rate for China, the producer price index for China for November. So market is expecting further increase on the inflation rate to 0.9% year on year from 0.2% that was printed in October. And even the producer price index is expecting to stop. That means, i.e., its decline is expecting to actually soften. Previously, it was negative 2.1%, so market is expecting to be similar at negative 2.1%. So something to look out for to gauge the deflationary risk situation in China that has started to improve in the last 2 months. So that could potentially influence the Hong Kong 33 index as well as the China stock market benchmark indices. So right, so with that, that sum up today's Daily Dose of Market Insights. I'm Kelvin here, signing off. I wish you all a great day ahead, and we shall speak again tomorrow. Thank you.